Stop overpaying on your home loan. We understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70 plus lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, welcome to a brand new episode of the Smart Property Investment Show. I'm Juliet Helmke, Senior Editor with SPI, bringing you this very special episode where we dig into some recent analysis that shows a perhaps unusual factor that could be impacting property prices for some of our listeners. Today, I am so pleased to be joined by Samir Chopra, Head of Research for the Pacific at real estate services firm CBRE. Samir, thank you so much for joining us today.
Thanks, Juliet. Really nice to be here.
So, Samir, you recently came out with some fascinating research, which is why we've asked you on the pod today. Well, not the only reason, but, certainly a driving force of something we wanted to dig into. And it relates to one of those line items that real estate agents always love to mention in listings profiles, really whether residential, commercial, anything. And that is proximity to public transportation. So your research, which we should mention was done in conjunction with PropTrack, you at CBRE worked with those guys as well. It looks specifically at Sydney's metro network. Now, for those who don't know, Sydney's metro is this fully automated rapid transit rail system that's being built in stages, with the first component of the Northwest Line having actually opened already in 2019, and it's up and running. But subsequent, quite substantial sections are to come online sort of now through 2030. And it's a big development for the city, isn't it? It'll be a big change.
Yeah, Julie, it'll be a huge, huge change. I think it's going to redefine the way commute works. So, if you think about, because, it'll start to connect from Chatswood through the CBD, Martin Place, and then head out towards the southwest, towards Bankstown. That's kind of the next stage that opens next year. And then after that, the next stage opens up the city to Parramatta. So it's going to change people's lives in many suburbs around Sydney. And I think the simplest way to think about this is your commute drops very significantly if you live near the metro.
Absolutely. Yeah. And, it really is that big stretch. So they're saying by 2030, 46 stations, 113 kilometers of new metro rail. I mean, that is huge for a city. And while some of these stations will be popping up in places that sort of already have a train station nearby, as you said, for many of those, it'll provide, different links or direct access, and so cut down on their commutes. For others, this is a new hub. This is bringing something that they haven't sort of had in their neighborhood before. And so that has obviously, caused a lot of different reactions. A lot of it is excitement. Councils have had their say in this too. Residents have talked about it. I mean, it's a big thing for a city to pursue. We've seen the government go back and forth a little bit on how they're going to actually execute it as well, which has been interesting to see.
Yeah, look, and in some ways, parts of it had been a theory, and now it's all coming to fruition. So you'll start to experience this next year. And I look at this as, there's about another 5 to 10 years of making money opportunity with the metro, and people should look to take advantage of it. Yeah, a typical way to think about this is if you live in the Hills district in Sydney today, it takes about an hour and 20 thereabouts to come into the city. You've got a few changes to make: buses, trains, switch, and once the metro is up and running, that commute drops to about 30 minutes. So people are going to be saving anything from 30, 40, 50 minutes on their commute.
That's huge.
Each way, every day. So yeah, look, and I think people want that, right? So it means properties that are near the line will become more attractive. Properties further out will become within reach. And so, some people are starting to move in, and my own view is we'll see a lot more retail, restaurants. These things will become new hubs. They'll become new cultural centers. And we're starting to see some early evidence of that.
Yeah, so let's talk about what that research really found, because even before many of these stations have opened, it seems like people are already keying in on that investment potential, whether as investors who are realizing the opportunity to sort of rent it out, or, particularly for people looking for their home and are really clearly, as you're saying, prioritizing that proximity to shorten their commute, to get in and out of work faster, and be able to get home, have more time to spend, whether with their families or in their homes. So let's have a look at a little bit of that data that actually came out of it. If I can sort of go take our listeners through it a little bit. So you found that suburbs along the metro line have experienced a 49% increase in capital value over the past decade, outperforming their peer group by an average of 5%, which is not nothing, when we're talking about these property prices, and particularly the property prices around Sydney. So the gap, as you say, has been even wider in certain neighboring suburbs, with the metro line suburb of Castle Hill, for example, recording capital value growth of 72% compared to growth that's occurred in the non-metro suburb nearby of Balcombe Hills. So that's really something. Tell me about when you were doing this research and when you found some of those figures coming up, what you found that was really telling you about the potential of in these places.
Yeah, look, Juliet, I think some of this came about, we saw something similar in the UK. And that gave me a good rule of thumb. And the rule of thumb was, for every 10% you cut your commute, people are willing to pay 6% more for a property. So that's kind of the rule of thumb. And when we apply it across Sydney and the train stations that have been activated right now, that point that you made about on average, we've got about 49% sort of capital value growth over the last decade. My other thing with this is I think we're just getting started because they've opened up one part. When they open up the link and you're able to connect directly into North Sydney, into Barangaroo, into the CBD, into Central, it is going to make a massive difference. So I think I'd say we're in the early stages, the first innings of this game, and it'll get far more interesting and exciting as the next links open up next year.
Yes.
It's not far away.
When we'll really, one of those links is actually opening up not far from where I live. And I can tell you, it's the talk of the town. It's what people are chatting about all the time. The transit options, but also there's been work going on for such a long period of time. I think communities are also ready to have this open, to sort of have it set up and ready to go. And it brings up another sort of interesting insight here, because, clearly property prices are being impacted. They have been in the past, even just in anticipation. As you say, they will be in future. We're in the sort of first inning. But what else? How else have sort of the demographics or communities of these neighborhoods shifted, perhaps, in relation to the news and to the development of the metro network?
Yeah, look, Julia, typically, around these transport hubs, we have seen much more significant population growth. We've seen a lot of densification, and roughly speaking, the population growth around the metro line in the last decade has been about 23%, and that's double the rate of Sydney. So the metro lines are growing at 2 times the rate of Sydney. They're 2 times more dense. And with that density also comes more Gen Z and Gen Y. So you get this younger cohort of people sort of moving in. And then as they move in, and we found, you've got a much denser proportion of Gen Z and Gen Ys in these metro suburbs, they pull in a different kind of retail mix. They tend to pull in a very different kind of food and bev mix. We're finding right now that, on average, there's about 36 restaurants and cafes for every 10,000 people on these metro lines today. And that
Wow.
compares to about 17 to 18 cafes and restaurants if you go further away from the metro. And like I said, this is first innings. I think these things will become a real hub for, picking up your food, shopping, hanging out. And you can kind of see that in some of the suburbs. If you go to like Chatswood, for example, around the Chatswood train station, there's a whole new sort of food dining precinct, a much younger crowd, very different sort of feel to it. And I think it becomes part of the allure of investing in some of these suburbs.
Absolutely. I couldn't agree more. And as you say, it really is sort of, right at the start. There is more to come, that we could see coming up in these neighborhoods. Some really great insight there. I think we'll jump more into that after we take a very short break to hear from some of the people who support SPI Show.
Are you stressed out not knowing where to find distressed, off-market, high cash flow properties in high-growth areas? What about the best strategy to build a wealth-generating portfolio? Look no further. Dragan Domovsky of Buyers Agency Australia can help. With over 20 years of experience as a property investor, Dragan is a qualified property investment advisor and expert buyer's agent, so he knows how to find the best deals and negotiate for his clients. Right now, he's offering a free 45-minute strategy session to get you started, normally worth $500. Text the code BAA along with your name and email address to 0405 105074. That's 0405 105074. And take advantage of this offer. Take control of your financial future today.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Samir Chopra, and we are talking about Sydney's Metro project. Some of the ways that this, really big transit and infrastructure endeavor across Australia's most populous city has been impacting not only property prices, which is obviously very substantial, but kind of the communities around the hubs that have opened and will open to accommodate the new stations. So, Samir, you were kind of sharing before the break how some of the, commercial offerings, in fact, have been changing in advance or as a result of some of these stations that have opened up. And I'm interested to talk to you about, because we've spoken about how the shortened commute is really a big driver of the popularity of these neighborhoods, but it's almost a little bit of a one thing feeds the other, right? Because what else could potentially be driving this popularity? And as you're saying, with more retail and coffee shops and that kind of thing opening, could we also say that, people are being drawn to these areas because they're becoming more cool because they are close, to metro hubs?
Yeah, look, there's a couple of things. One is a large part of where the metro is originating and terminating are also suburbs that have typically been more affordable, cheaper to buy into. So I think what it's doing is it's allowing people that live in more affordable areas easy access to the city. So I think that's kind of one. I think over time, these areas will end up with a lot more facilities like childcare, not just restaurants and cafes. The other third thing is, when you have this very easy commute, there's less need to be a 2-car, 3-car sort of family. You can cut down your cost of living in some ways by reducing the amount of other modes of transport that you need to have access to. So I think a lot of these things will combine together to make transport really easy. I'm one of these people, by the way. I commute on the bus every day right now, and 5 days a week, you save money, and it's a very sort of easy commute for me. So, and I'm hoping that more people can sort of experience that. There's one other thing, Juliet, something that's happened in London, which may happen here as well, is that there is less inclination amongst the younger population to get a driver's license, to actually even bother with driving. With the availability of services like Uber, and if you've got or other ride sharing, and if you've got very good public transport systems like the metro, then I think, people can, to your point, be more cool and maybe not have a driving license.
Yeah, I think that's true. And look, that in the long term also substantially alters a city too. Just to share, I moved to Sydney a couple of years back from New York City, where I didn't get behind the wheel of a car for about 10 years, to be honest. It has a very dense subway system. I, and like many of my peers, weren't really looking at cars as a normal transit option. Now, living in Sydney, things changed for us a little bit. We do love living, when we looked for where we wanted to live, living near a train station was very important to us. But at the same time, we quickly became aware that it was a city where if you wanted to experience some things, you kind of had to get into a car. And so for quite a while, we were doing, the ride share or the car share kind of thing, where you have a subscription and you can get a car when you need it, but you don't have all that upkeep. And so I'm interested to hear, how do you feel as perhaps more of the city becomes more accessible, people realize maybe they don't need a car? What does that do to cities, particularly in the middle where it becomes less of a car focus and perhaps even more of like a shared zone, a community zone?
Yeah, look, I think it'll spur new forms of the economy where, some of the shared economy type systems will flourish. But I think, Juliet, the other one that we're keeping a close eye on is return to office, because one of the bugbears with people, returning to office more consistently has been commute. So, people want to sort of interact with their colleagues. They want to, where they can, have an in-person experience. But one of the big bugbears has been, I don't want all that downtime on commute. And so we think that, come next year, when this second phase of the metro opens up, a lot more people will return to the office. And some parts like Barangaroo, for example, which currently are not well serviced, will find themselves right in the thick of it. So if you live in the Hills District and you want to get to Barangaroo, it'll be much easier. If you live in Canterbury, Bankstown, that sort of area, and you want to get to Martin Place or Pitt Street, it's going to be very convenient next year. So there'll be less of an excuse.
Yeah, absolutely. And look, I love getting into the office here. We've got a vibrant and very exciting office culture. But I'd be lying if I said I wasn't excited for the fact that when the metro line opens here, we are located in North Sydney, and I am a Sydenham resident myself, and eliminating the need to change trains once that line opens is look, that's a pretty exciting prospect for me personally. I know a lot of others are looking forward to that. As well. So it'll be I think it'll be really good to see. And, Samir, I know that you are a big believer that research must be useful information. And so, we do, obviously, we've sort of talked about how this is already being useful for, investors, for property buyers, that kind of thing, because we can see it's happening already. But I'm interested to hear, how do you hope potentially this information is used by governments, say, because they're the ones who are very much driving this project, but also what happens after will somewhat be up to them as well.
Yeah, look, I think, governments are trying to create these large infrastructure projects, and there's quite a few of them. This is probably one of the most interesting ones, the Sydney Metro project. The one thing I'd say is, currently our estimate is there's about 5,000 apartments a year being built around the metro line, 5,000 per annum. We think, it is well worth thinking about stepping that up to 9,000 to 10,000 apartments per year, because, it's an expensive piece of infrastructure, and B, it's something that massively satisfies consumers that use it. So we've got a sort of increased densification around the metro. So and our numbers, like I said, is we're currently building about 5,000 a year. We should be doing 9,000 to 10,000. Densification should be around the metro.
How does that happen? What needs to be in place to get those numbers ramping up? Because we are always talking about supply here at SPI and the issues around, getting that to actually come up to where we need it to be.
I think that it's a twin thing. I think one of the things that's held supply back, which governments can't fix, is the cost of construction.
Yeah.
So the cost of construction has gone up by about 35% in the last 3 years, and that, along with high interest rates, has just meant that it's not easy for developers. It's a really, really tough environment right now for real estate and developers. So anything that can be done with cost of funding can sort of help. But I think the other thing is, opening up more land zones for residential development close to the metro. If it's near the metro, I think the government needs to be a little bit more forceful about making sure that land can be very easily repurposed.
Yeah, absolutely. And it'll be interesting to see, how they kind of react as all of this continues to roll out. We're going to be taking a short ad break now. We'll be back on the other side with Samir Chopra from CBRE. Welcome back to this episode of the Smart Property Investment Show. I'm joined by Samir Chopra. Samir, you're an expert in developing economic and property sector forecasts. We've been talking about this fascinating one all episode about how the Sydney's metro line is really has changed and will continue to change property across the suburbs in which the metro is popping up and has already opened. I'm interested to hear, over the past few years have been a particularly tumultuous time. And it feels like people are more and more grasping for those forecasts, for those things to say like, oh, here's a good place to buy, whether you're an investor, an owner occupier. And I'd love to hear from your perspective. What are some of the things, or what's something that you particularly have been hearing for people that they want to know over, say, the past year?
Yeah, look, I think people are always looking for the next most interesting idea, and we look for things that where there's market where supply is very tight, and supply is not going to increase. I always find you are rewarded well in markets which are supply constrained, and residential is one of those areas. Student accommodation is another one of those areas. And Juliet, I think some people might find it interesting, but I actually like retail as well. I think, in Australia in the last decade, people have been very concerned about e-commerce, and no one has spent enough money. There hasn't been enough new money to build out new shopping malls. And so we're entering a point now where there's deep undersupply in retail. So we're starting to have a good look at it, because you still have very good population growth, but just not enough retail space being built to accommodate it. Just like we have the shortage in residential. So they're kind of some of the themes that we find interesting. My own forecast is that the average residential rent in Australia will increase by about $120 a week over the next 5 years. So on average, it'll be about $120 per week. There are going to be pockets that significantly outperform that, and there'll be a few that sort of don't sort of meet up. Canberra is probably a market where we are softer on our rent growth forecasts, and Brisbane and Sydney is a market where we're a lot more optimistic in terms of where we think rents are going to grow. So they're kind of some of the things we're looking at. At some stage, office will become an interesting market to invest in. But you need more supply to be pulled back. I always keep an eye on supply. If there's a market where not enough stuff is being built and stuff is getting cancelled, then we like it. We go sort of counter-cyclical, because it means there will be shortage at some point in time.
It's the waiting game, isn't it? It's the long-term strategy.
Yeah. And look, and we find it works, right? Like residential has been one of those sectors where there's been 3-4 years of underinvestment and undersupply, and rents have started to accelerate. Retail, we think, has now been through almost a decade of pulling back on supply, and so that's a market that's interesting. And then office will come at some point after that.
Interesting. And, you talk about those, rapidly rising rents, which of course we've seen in markets all over the country. And you put your forecast out there, which was really interesting for us, and I'm sure for our listeners to hear. In terms of those markets that you think might outperform that, what are the factors that you're seeing that could influence that? So where are these big top performers coming from, and what's impacting that?
Juliet, I think the one thing that drives rents, one is sort of vacancy. And what typically drives vacancy is supply and jobs. So in markets where there's very good jobs growth, people have jobs, they're employed, they're getting paid well. You can afford to increase rents in those areas. It's very challenging where unemployment's high. And then the other one is just look at the vacancy and supply. So if there's a lot of supply coming, then it's more challenging. So they're the two sort of factors that we play with in our rent forecasts. And parts of Sydney and in Brisbane, we are going to see very strong jobs growth, very low supply, and that's what drives up the rents.
Is jobs growth also one of those indicators you're looking at for the office market as well? Because, as you mentioned, what it's doing now is like a little bit of stagnation, but certainly getting into that now could be something where if you're prepared to play the long game, it could pay off. So what are those sort of green shoots, perhaps, that if you've gotten into that market, that once those start to appear, that perhaps changes on the horizon?
Look, I think in the office market, it's similar to retail. Good quality stock is what's attracting all the attention. So people want to shop in very good shopping malls. People want to go to offices with really nice views, easy access to transportation. So we look for the quality factors rather than price when working out whether we're interested or not interested in a piece of real estate.
Fascinating. Yes. And I think, sort of bringing it back full circle, I feel like, that transit is also a big piece of the puzzle that people are looking at, not only in residential, but across their commercial holdings as well. Is that foundation there? Because that's something, once it's there, that's not really going away. So, potentially one of the factors that people might be looking at right now, if they're prepared to kind of sit and wait with a commercial asset, is also that transit as we've been talking about.
Yep, exactly.
Yes. So Samir, I think that's about all we have time for on this episode of the Smart Property Investment Show. I want to thank you so much for coming along to have a chat with us today about these, really fascinating and insightful things that, people have in the back of their mind, but sometimes don't even realize what an impact it has on their assets. Yeah,
exactly, Juliet. Look, thank you so much for hosting me. And I'd say, just keep an eye on all the precincts that are getting developed in Australia. There's always good investment opportunities when you're investing alongside, government and other large developers.
Absolutely. We couldn't agree more. Listeners, if you liked this episode, be sure to like or review us on whatever platform you do listen to podcasts on. Stay up to date with all the latest news over at smartpropertyinvestment.com.au and follow us on our socials, Facebook, Twitter, LinkedIn, and Instagram. If you have any questions or want to put forward someone who you think would make a great guest on future episodes of Secrets of the Top 100 Agents, send us an email, editor@smartpropertyinvestment.com.au. Until next time, stay well.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference, or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.